All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen. I'm definitely happy and grateful for all of you this morning being here with me as we take a look at the technicals and the fundamentals in the Forex market to see what we can take advantage of. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So if everybody can hear me loud and clear, drop me a 1 in the chat and we can get this morning's session going. All right. So let me click out of here and okay. Let's move over, take a look at the Forex calendar. Good way to start today. And we see there here on this Wednesday, October 26th, we have 8:30, goods trade balance. Nothing too major that could rock the market. But at 10 a.m., we do have the Bank of Canada monetary policy report and the rate statement. Okay, so we are looking to see what we are going to get out of that. See if we will get 75 basis points coming out of Canada. It should be interesting. And then as always, the press conference that follows at 11 a.m. Has the ability to move the market as investors start to try to figure out what's going to happen next in the future for Canada in regards to monetary policy, looking for any type of change in tone or rhetoric as compared to their previous meetings. So we'll look forward to hearing what comes out of that press conference today. So we're expecting 75 basis points. So we'll see if they hold to that, right? Always could be right on point, could be higher, could be lower, right? So we'll see what happens. And then moving into Thursday, okay, on the 27th, we have for the euro, we've got the monetary policy statement and the rate hike is expected. So we'll see what happens there. And then we've got the press conference at 8:45 a.m. tomorrow. So 2 very important days in regards to monetary policy for Canada and for Europe. And just to scroll back to yesterday with the Australian dollar, we saw that the CPI came through high. So if you come to trading economics, you can see here, Australia, Q3 inflation rate highest in over 32 years. Okay, so it's going to be interesting to see how they react as they have been talking about slowing down the pace of their rate hikes since they've been fairly aggressive in a short amount of time. So we'll see if that changes anything as it relates to Australia. But also, in regards to Australia, iron ore retreats to an 11-month low, okay, in regards to price. So we know that that's their number one commodity coming out of Australia. So we'll see how that affects the Aussie. A lot of interesting price action happening in the market. And here on the front page, right, euro back to parity. So we got a boost in the euro, pushed up past some of those zones, went right to the next zone, right, higher level that we were looking at yesterday. But that's giving us a nice high price. So what we're looking at is 75 basis points for tomorrow, and we can see that speculators are pricing that in. So that's why we see that happening with the euro. So it's been a pretty nice correction. So we shall see. We saw the gold, right? Gold enjoys a wave of momentum to gain further ground back to $1,700 per ounce. So we'll take a look at that. And then we see here the report on investing.com is that NASDAQ futures fall 1% as tech earnings spark slowdown fears. Okay, so still a lot of recessionary fears. Okay, so when you look at it overall, through all the mess, right, we still have the same bias, right? Possible recession, strong dollar. We will see corrections in the dollar, but still looking for a bullish dollar as it acts as a safe haven as well in regards to a hawkish Fed. Now, there is some speculation that that the Feds may look to pivot soon. So a rate hike of 75 basis points from the U.S. Fed coming up in November, and then people were thinking that they may get a little bit dovish on the hike come December. But we will see how that goes. We did get bond prices and bond yields to come down. So we hit 4.24, and now we're back down to 4.069. It's fascinating, right? Because if we look at the dollar, look where it came right back down to, everybody. Okay. Look where it came back down to, right back down to that support. Okay. So we'll see how it reacts. Okay. From the daily, our stochastics back in the buy zone there. And we'll see that it's trying to hold at that level and is reacting so far today back to the upside a little bit. Okay. So we'll continue to watch to see if the dollar holds at this support once again. Right. There's been a lot of back and forth. Okay. Fascinating times. So we'll continue to watch that, and we can see how all of this plays out. So we saw that the dollar finally broke that tight little range and came right back down to support. So when you look at things like we'll take a look at the Australian dollar, you can see what happened, right? It rallied. Okay. So we got that 80-20 to push through, and now we're sitting at a high price, just as the US dollar, the DXY, is at support. Okay, see? So if we start to get buying momentum off of this low, you'll see the Aussie dollar, a pair like the Aussie dollar, fall off, right? And technically, with the sequence, is right in our sweet spot. So we'll continue to watch that. Okay, we'll continue to watch that move, but it's right in the sweet spot. So everybody kind of see how the ebbs and flows of the market and how it plays right into the wave sequence that we teach. Right, drop me a one if you guys are starting to see how that plays out. Okay, right. So that's why we use this method. Okay, so when you look at something like the Euro USD, okay, we were looking at certain levels. Okay, we were looking at this level here, didn't hold, right? Didn't hold. It wanted to push higher. That's just the market. But hey, we're right back here in the zone now. We've got the DXY sitting at a support level, and now we're in our sweet spot on the Euro USD. Okay. Didn't know if it was going to get back. Okay. I definitely didn't think it was going to come back to parity like it did. Right. We got right back to parity to $1. That was a pretty strong push. All right. So typically, right, coming up on a rate hike, you see the majority of it already priced in by now. But we got an extra push, right? We got an impulse move to the upside. Okay. So combination of rate hike tomorrow, okay, getting closer to that for the euro, 75 basis points what's expected, and right, more reports starting to creep out that the Feds may pivot. Right. So that caused a little bit of a dollar sell-off in addition to your bond yield starting to turn over and correct. So that's where we are, but we've pushed to a higher price now. Okay. Sandra.
Given where looking at the euro, now that it's up in the sweet spot, what are you looking for? A higher high and then a drop, or are you going in at a limit?
Well, this one here, typically, I would be sitting in this short right now with a small position, probably 0.25%, 0.5%, right? But I got to hold because we've got the rate hike tomorrow. Okay, so we've got what's this tomorrow? So we've got a rate hike tomorrow. So what I'm going to do is I'm going to hold because now, right? You may see an initial thrust up, right? So to me, this was they've been talking about 75 basis points for a while, and they had already been pricing that into the market, right? So that's why you've been seeing the euro push up. So this extra push to the upside, I didn't quite expect that, but hey, we got it. So what I'm waiting on now is, because if it's time for this to finally get back on the decline, it's got a long way to go. So what I'm going to look for is the trend line break, right? And then I'll let price run and then pull back, right? So it'll be more like this here. Okay. So to be more of a move like this is what I'm looking for, right?
Mm-hmm.
And then a correction down like that. You could be patient with that. Okay. Some folks they just limit in, period, right? If they're putting a small position in, they're like, hey, if it runs, it runs, right? So typically, if I wasn't looking at a rate hike tomorrow, then typically I would be in here and then I've got another position here. Right? I've got a sell limit there with the 786, and then I've got my stop above the high. Right? But I'm gonna wait on this one for tomorrow.
Okay.
To see what it gives me. But that's typically what I would do. So probably a 1/4% at around the 61.8 zone, which is right there, spot on the nose. Another 1/4% here at the 786 stop above the high. So then if I get stopped out, I'm out a half percent.
Got it. Are they your same thoughts on the Aussie, given, well, that had its fundamentals yesterday? So on that
Yeah,
one,
the Aussie dollar plays short to the short side.
okay.
Already, right?
Mm-hmm.
See where it's at here on the 4.
Right. Mm-hmm. Mm-hmm.
Yeah, that's what you do. So that was a beautiful 80-20 swing out of that zone, right?
Yeah.
At the time when it first occurred, it's over 200 pips just to 382. So when it is it's weird how the market is, right? Because you see the news, you see what's going on in the short term, and you're thinking like we were looking at ridiculous dollar strength, right? So you're thinking like man, why would I take this trade at at this 118, 127 zone for 80-20 when the dollar has been so strong? But then look what happened.
Yep.
All right, look what happened. It's on the other way. So it's just further proof that the market moves in ways. It doesn't happen all the time. No, you can go back, right? There are trades that you're going to take where they don't go your way, like here, right? That one hit at 236. That's when that dollar is really, really, really kicking. Okay, so you could tell by the momentum here that on this fib we only got a pullback to a 236 and then it shot to the D extension. Mm-hmm. Whereas here, right, we got the correction that we were looking for. Right. So you don't want them all. You just trade in the areas of highest probability. That's what you do. See here you got it. Here you got it. Up here in these smaller ones, you didn't get it. The momentum was strong coming off of this weekly resistance level. Right. And that's how the game goes. So that's why you try to put yourself in the best risk to reward ratios, understanding that, hey, we don't want them all. Okay. Mm-hmm. But this is in your sweet spot zone. So if your trade plan calls for you to trade these areas, that's what you trade.
Yep. Got it.
That's what, yeah. Mm-hmm.
Mm-hmm. Got it. Thank you.
You're welcome. You're welcome. It's a momentum. It uses an algorithm, Herman. It's a momentum indicator. So it tells you where there's a potential where the market has reached, where it's getting kind of overextended in regards to momentum. Okay. And where you could potentially find exhaustion and a momentum shift. Right. So we can see here, we're getting up around some pretty high levels. Okay. On a stochastic. All right. So we're at 94.87. So there's the potential for a correction to the downside. So now, right, let me show you guys how you can take these setups. And if you're day trading, right, and you like playing on lower time frames, the price action is the same, right? Look, you got a new AB boundary, okay? A new AB boundary. I can pull these out now. You got a new AB boundary on your 5 minute. Look. Okay. So why does that make sense? Because price has been retracing. In order for price to retrace in a downtrend, it has to move up. So if you go to your 5, you got the same wave sequence playing out, just at a smaller, right? Smaller level. See, look, ABCD, ABCD. Now we know where we are. On the 4 hour, we know we're at a high price. So it may be time for this run to come to an end and for it to reverse. Okay. So you see it happen in cycles. So you can look at this Aussie CAD, right? This is a 5 minute play. Why? Because we know on our higher time frames, price has been correcting. Look. Everybody see that? Drop me a 2 in the chat. All right. So once you understand that the market moves in ways, it becomes a different ball game for you. So here is price on this Aussie cat. We've been watching this in this consolidation off this B boundary, and you can see it broke it. But look, that's a nice impulse. Okay, this is a 4-hour chart. These are big moves. It's 136 pips. The market moves in waves. Okay, so now you could come here and you can look at this on the 4. All right. So that's that 382 target. Move that up just a little bit. There. Okay. If you come down to the 5, you can see it, right? So this is a 4-hour 382 in your 5-minute chart. So now it's just a matter, right? So on a 5-minute, okay, we just shrink it down. 5-minute, I've got a price at this 118 level. Okay, so it becomes the same scenario over and over again. Nothing changes, right? Now I've got it. I know where I'm ultimately trying to move. So do I want to play and take advantage of this move to the downside? Okay, short-term play, or do I want to wait for a low price to see if I can get it to push down and correct to move towards this 382 target? Okay, so here's how. Hey, I've got a 382 target. I'm long. Here's how you can get in on a move that you might have missed initially. You just go down to the lower time frame. Boom. Right? So if I'm a day trader, I can either look to short this position because it's in the zone, regardless of time frame. That's 37 pips. That's 57 pips there. Or I can wait for a low price to get back long on the move. Okay. Straight to that target. Okay. You look at the Aussie Swiss. Okay. Look. We've been watching it. Look at the push. Look at the rallies. Look at the rallies that's happening. A, B, looking for that C. It's amazing. Okay. Good correction. Whip around the 61.8 zone. Well, look, it had to move in ABCD waves. So if you go down to the 5-minute chart, there's the waves. Okay. So here's a new AB boundary. Here's the 80-20 play. Now, on the 4-hour, we're sitting in the sweet spot. Okay. So we know that on this 5-minute 80-20, it has the potential to be a bigger move. If it's time for this to continue bearish, then it'll take that A out and keep right on moving. Okay. So if I've got a 61.8 pullback, and this is where this rally to the upside is going to stop, and it turns over and it's going to continue bearish for the Aussie, then my long-term target is right there at 60.18. Okay. Okay. So that's the 4-hour D extension. That's what that's trying to do. All right. Which is right there.
Hey, Benny. Hey,
yes.
Can you hear me?
Yes.
I'm just looking at my fib on the 5-minute, and it's not exactly matching up as yours. I'm just wondering if you can zoom in a bit where you started that fib.
Right here.
Oh, that's a bit further back than me, I think. Would that be almost October 15th or so.
Yeah.
Okay. Yeah, that's why. Okay. I see where you're at.
Got
I
it?
didn't go that far back.
Okay. You went more recent.
Yeah.
Okay. Okay. Do you have a new AB boundary though? Or is it?
No, I don't.
Okay.
It was just taken out. The D extension was just hit.
Oh, I was just hit on the one that you have. Okay. Okay.
Yeah.
So similar, right? Reversal point potentially. Yep. But
Yeah.
I'll always go to as far back, and then I track them forward. So I'll run fibs from way back, right? From way back where that run may have started, and then they'll get taken out along the way, and then it'll finally activate and move it forward to the most recent fib.
Gotcha.
Yep.
Okay, I'll track it back. Okay, thanks.
You're welcome. You're welcome. Okay. So that's where we are. So no matter what time frame you're on, right? The market's gonna move in waves in the direction that it's going. Okay. So if we look here at the daily, we're coming right in at this 382. Isn't that amazing? Look at the swing. Okay. So we'll see if we're gonna get that reaction there. That's that 4-hour level that we brought up. Okay. So it's right at the 382 right now. So we'll see if price reacts. And so that's what it looks like. Okay. All right. All right. So that's that. There was another one, right? For example, if we go and we take a look at the 0 Aussie, see this here? See what price is doing? Okay. So this is the daily. Okay. And we've gotten a reaction back to the downside. So we're pushing bearish. Okay. Pushing bearish on the 0 Aussie. What? You get nice moves down. Okay. So if you look here from the top, that's come down a ways. Price likes to correct itself. So we see that we've been moving up to the top of that zone off the 4. And now you're seeing we're getting a reaction. Okay. Coming back down. Now we may end up range bound, but hey, we're chasing 154.02 support in the near term. Okay. So you can see that here. Right? Right at your 80-20 zone on the 1. See that? And that's waving down. It's pushing up. Now, if you do something like you come to the 5, you can see, well, we've reached some exhaustion. So if I'm day trading, I'm in the 80-20 zone. My stochastic's in the buy zone. So I may be looking to take that. Where? Back to the 382. Same stuff. Okay. Same stuff, different time frame. Okay. It's universal. Okay. So if I can get that move, to continue to move, right, long for the correction, I took that out. I wanted to check to see if that was an active wave, but it's not. So if we move back to this 382 out of that zone, that's 86 pips on the 5-minute chart. That zone is the zone regardless of time frame. Okay, look at your swing here and your pullback. Okay. Just look at the sequence play out.
Okay. Can you take it to the 1 hour again? Just want to take another quick look at that.
Yep. Okay. See how choppy that is, but that's that range, right? So if you go here and we bring these levels down, like so, okay. That's where you are. So we pushed up. Mm-hmm. See the swing? And now we're in that range. But you see how you get the momentum moving, and then it gets up to that 118, that 127 zone. In this case, you got good support and resistance levels there, and how it just started to move sideways and struggle a bit. See how price reacts in that zone. Right. Look here. Right. Look at your momentum, right? Look at your correction, your B to C, and the push up. And look at how it exhausted. Okay. If this is all you look to trade, you say that's my thing, then that's your thing. Right? That's your thing.
Got it. Thank you.
You're welcome. Herman, the levels that are being tested. So at least on my charts, whenever you see different levels, you can always tell it as a daily level by the color, right? So my daily levels are in red, my weekly is in blue, and my monthly is in black. And if I use a 4-hour levels, they're going to be purple. Right. So these are daily levels. I know you asked that question a while back. I wanted to make sure I got back to you. Okay. So there we are. We're a bit range bound there. So you could just think right in my head, okay, price is moving down. Okay. Price is moving down, right? Lower lows, lower highs, right? Boom. So now am I in a situation where it's ready to make a lower high? And you can play that, right? That's what you're seeing right here. If this is what the market wants to do, then I can buy that, right? Or I can wait for a high price and look for a continuation to the downside, to that support level. Questions?
But again, because this is your Aussie, in terms of the way you trade, you would still wait for the rate hike information tomorrow to do anything on this.
You could. This is on a 5-minute chart, so you might get a reaction today on that. Yeah, that's for those longer swings. For those longer swings, your 4-hour and things like that. But here you might get that to push. You know, it's a 5-minute chart. I wouldn't be surprised if you get a reaction off of that and it hits target ahead of that. But yes, you are correct, right? So regardless, if you with a rate hike tomorrow, sometimes hey, you might just want to lay off the pairs period. But you know, when you're day trading on these charts like that, you know, you might be able to get good movement on that. Now, what you sometimes what you will see is ahead of a rate hike for a currency, you will at some point oftentimes start to see the market start to push sideways in anticipation of the rate hike. So that just lets you know that the volatility is there because everybody's waiting. You know, so at some point during the day, you may see that start to occur on some of these euro pairs.
Okay.
Yeah. So that's an interesting one. And then if you need confirmation, right? Just that's what we said, that was an 80 pip move. You know, let it push up, see if you can get a wave out of it. Right? Yeah. 80 plus pips. Like, see if you can get price to push up and pull back if you don't want to take it right out of the zone. You know, there's different ways you can play that. Wait to see if you get a trend line break, or wait, you can see if on this 5-minute, okay, there's a resistance level there. Okay. Maybe you say if I get a break above and I get price to hold, right, like so, then I'll look to take it. Okay. Different ways you can play them. The key is be able to consistently spot the zones, the reversal zones. All right. Good question. All right. So I wanted to take a look at this Euro Swissy. All right. on the 4, right? So we want to keep an eye on this one, knowing that we've got a report coming up, okay, tomorrow. Okay? But look at where it's holding. Okay. So sometimes during those reports, you'll get it where it comes out, and you may see an initial move in one direction, and then it'll calm down, right? When they move into the press conference, and there may be some language used that'll cause price to start to decline. So maybe you get an initial move up, and then price can start to decline afterwards, right? Start to get a sell-off. So this is one that's in that zone, right? That we want to pay attention to. Okay, that's a daily level here at 99.52. Okay, so if we come up and we take a look at it, how it's just been moving. See? Okay. See how it's been pushing off that bottom? Okay, off that 382, we're coming into this resistance level. Right. So it's just a matter of it wants to react. It's definitely overbought in this zone. We're not quite to a 382 yet. So when you're looking at the lower time frame, it's a correction play. Right? Because here's our our daily 382. This. Okay. Not quite there yet. So it's just a matter of, do we want to react? So there's 98.65, which is a weekly level. Okay. So that's right here. Okay. So maybe you get that push here, and then if it holds, right, we may look to rebound. If not, if it breaks it, then we're coming down to 9,800, and then beyond that, okay, then below that, I mean. So that's what we want to watch out for as well. And then you can look, right, on your 5. See how no matter what the time frame, the same plays are occurring. You see the pullback to the 61.8. You see the break in the move to the upside. Plays out no matter what the time frame. Okay. See? Cassandra.
Okay. I hate to go back to the Aussie USD, but I want to dissect that a little bit more because I'm getting hung up on something, and that this one particular pair with where it's at today, I think would help me a lot to clear up my thinking and my trade plan on this.
Mm-hmm.
Okay.
Mm-hmm.
So if I'm looking at the 4-hour, we had a large engulfing candle that took it up to the 50% fib. Okay. And
Yep.
then right up above the 61.8, there is resistance there as well.
Correct.
So my first question for you is, you had mentioned, we're in the sweet spot, and you would put your stop above the A.
Mm-hmm.
Because the D extension from the daily isn't, well, let me ask you this, would you go to the daily's D extension, or would you play this down to the 4-hour D extension?
Great question. So you look at your higher time frame extension first, to where you may get a reaction here.
Mm-hmm. Mm-hmm.
Mm-hmm. So you play that first. So that's the first place where you may see a reaction. And then depending on the momentum, sometimes it'll drive right through it, right? So we know how, for example, we can look right here, okay? So you see how, if I scroll back, you see this AB boundary here?
Yes.
And you see this D extension?
Yes.
You see how price pushed past it?
Mm-hmm. Mm-hmm.
Right. So it can run. Oftentimes it can run straight through it. So this is our daily D extension. So what can happen is you can see price push down to this target, right? Come down to this target, but then you may see it, right, a correction, right, and then it might come back down, right, to chase that extension and the support at 59.77, right, because it's support and resistance game. So what I would do is I would first, right, look for that, know that daily target is there, and you may take profit there. I mean, that's
Right.
that's 100 pips, right, that you could potentially leave on the table if you decide to take profit there. But that's okay if you, you know what I mean? Like you made, right, decent amount of money to the downside on that.
Okay.
Okay. So that's just another higher level, that you wanna identify, where you might, so you're not surprised, like, man, I had my eyes set on this D extension and now I just got a 150 pip, 200 pip reaction back to the upside. You want to be aware of that. Now, if price pushes up, right, and pushes beyond that, these levels here, before it turns over, then it puts you right in the same zone anyway, right, on a higher correction.
Right.
Okay. So we don't know. The reason why I put that stop above the A is because you don't know exactly where that U-turn may occur. You can have an idea, like it may push up to this resistance level and then start to react.
Right.
But I just don't want to. Traditionally, the way I was trained, I don't want to get, from time to time, like I say, I love going down, trading the 5-minute charts and stuff like that, but I don't want to turn it into a timing game.
Right.
It's hard to time markets.
So my second question is, if you're putting your stop above the A, what does that do in terms of your risk reward? Say if it, when you're planning that trade and you first have your stop, you first enter at, say if you were to enter at the 50% fib or 61.8 and your stop is above the A, but yet your first target would be the D extension. What's your thinking there in terms of risk reward when it comes to taking that trade?
Yeah, so that's a great question. That's exactly why I play these zones, right? So typically is a 61.8, okay, and right 61.8 and a 786, okay, because it sets the risk to reward up nice. Okay, now outside of this D extension, it's still pretty decent. But if we're playing a traditional fib on a 4, okay, say this wasn't here and we're looking at this D extension, then it consistently push you in a really good risk to reward, right? So look, if I'm taking it at the 61.8, my projection right now is the 1.618.
Right.
Okay. And these are great questions that you're asking, because that's the entire strategy in a nutshell. See, look, right? So if I come down around that zone,
there's your 3 to 1. Yep.
Right. So in this case, around a 61.8, if you enter at your 61.8, I didn't need to move that. So if you enter at your 61.8, okay, call it 150, 153 pips, but my downside is over 400 pips. Right. So think about it. If price moves up and takes me in at a 786, then look what happens. My stop loss shrinks down on that particular pair.
Right.
See that?
Yeah.
But then look at my risk to reward to the 127. It's 424.
Got it. Now the light bulb goes off. Now I understand. And it was in the course, it's coming back to me now, why you put your stop loss above the A. And if it doesn't go above your A, it's going your way. So.
Correct. It's just a matter. So, yep, you got it. So what we always say is, right, that AB boundary is concrete. That's your foundation. The only thing that's going to float is your C and your D. Right. So that's why we do our best from the higher time frame to develop our directional bias. Right. So we're ultimately bearish. Right. So if I'm trading with the trend, and I'm bearish, I say, okay, my zones then, and my rules are, if I'm trading with the trend, I want to see price pull back 61.8 deeper. Because it puts me in the proper risk to reward. There's nothing magical about the 61.8 other than it puts me in the proper risk to reward ratio. See, the earlier I get in this move, right, I increase my risk, because if I take it at for 382, okay, and this is why you set your rules. Okay. If I take it at a 382, I can't put my stop above the A. It's not where I need it to be.
Mm-hmm.
You get what I mean? See what I mean? So now you can put, maybe if you want to take it off to 382, you take it off of a swing high that forms at that level, and then you're going to put your stop above the swing high at that point. But you can't put it above the A. But we know that just historically, if I'm putting my stop within the AB boundary, I have a higher probability of being stopped out. If you're okay with that, if you can stomach the series of losses like that, for that one big trade that'll make up for those losses and put you in the profit, then you can have that as part of your trade plan. But if you can't stomach that, then you need to do something else.
Right.
All right. Some people can. Some people can use really, really super tight stop losses and take 6, 7, 8 losses, and then hit that one winner, because now my risk to reward is like an 8-1, something crazy when I do hit it. But a lot of people don't have the stomach for it, or nor do they have the time for it. Nor do they have the time for it. So I rather trade small, right? And look to accumulate pips. Because if I do that enough, as my account grows, so does that 0.5%.
Yep.
But it's a slower accumulation. But some people want it fast. So, yep. What were you about to say? I'm sorry.
What about the 50 fib? So your sweet spot is the 61.8. So if you go within, like when it hits the 50 fib and then put your stop above the A, I guess that's then bringing us down to maybe a 2-1.
Yeah, potentially. And sometimes it depends on the sometimes it depends on the pair and the ATR. So I don't know if you guys notice, but you notice how sometimes the zones are bigger and sometimes they're smaller, the zones on the fib. So if you look here, so at a 50% level to a D extension, right? 443, 205, right? So it shrinks it a little bit, but that's still within range. It's still within range. So the higher that risk to reward ratio, the lower your strike rate has to be to make money, right? So that's the key. But just think about it though. If you can get consistent, right, in your directional bias, and you set a solid trade plan, we already know that at a 3-1, you only need to win 3 out of 10 trades to make money. So just imagine if you have this method and you get that strike rate up to 50, 60, 70%, right? At a 3-1. It's a game changer.
Right.
It's a game changer. So, the issue that I see with traders, especially in the beginning, and it creeps in on veterans too, because it creeps in on me, is that when they lose a trade, they want to get back in right away. And sometimes that takes them outside of the trade plan. So because they don't like seeing red, like, oh, I just lost $200. Oh, I just lost $100. I got to get that back right now. So now you come in here and you take a trade, at a 236, at a 382, that's not in your trade plan. And now you're in drawdown. Now you're in drawdown. Now you're mad, instead of just saying, okay, I lost that trade. I'm down $100, but I still need to stay disciplined. And I'm only going to trade 61.8, 786s, and 80-20s, right? So you'll discover, and that's why we say, like, you got to hang in there. Like, people quit, they leave. It's like you didn't give yourself a chance, right? Because you need to know, like, okay, I've done enough trades where I don't like taking trades off the AB boundary. I don't like taking a counter trend move off the AB boundary. So let me clear this out. and just go up here and do this. Okay. So you may say, through my discovery process, I don't like playing a counter trend move directly off the B boundary. Okay, like that. I don't like it because you may say I've been in a series of trades where it's pushed up a little bit and then it got short down to that 118, 127 zone. And I don't like that drawdown. Or if I have my stop below the B boundary, I get hit with the stop too often. I don't like it. I'll pass. But you may say what I will play is every time I see an 80-20, I'll look to take that trade, whether it be limiting in with additional confirmation. Maybe you come into your 80-20s, say on a 4-hour, and you say, you know what? I'll draw a trend line. And if I come down to that 80-20 zone and it forms a swing low, which is support, and I get a break, I'll take it. I'll take it back to the 382. So that's the one counter trend setup that I will play.
Where are you placing your stop on the?
You can place it if you wait for your loader form. If you wait for a loader form and a trend line break, you put your stop below the low, like this. Okay. You put it right below your low, like that. Okay. And if you're trading 1 hour, 4 hour swings, you got time, right? So if you're working, you got time for that because it's got to form a low. That's a 5 candle combination and it's got to break the trend line. Okay, so you got time. There's no rush on that. Now, you can, right, when you're playing the percentages, okay, you can limit in at that level or as soon as price gets there, but then you just use a wider stop. Okay, you just use a wider stop. Or you could say, you know what, I play the percentages here, so I at least need a 1-1. So if I'm in this zone and to the 382 is 253, I need a 1-1 or I need to do half of that at least, right? 125 or something like that. And then you're gonna trade smart, you're gonna let it swing. But if you want a tighter stop, then you wait for that loader form, get a break, and then you take it back to the 382. So it just requires just a little bit more patience, but that's the zone, right? That's the zone. So your trade plan may be counter trend. I only trade 80-20s out of the zone, period. And then you might say, I only take it back to the 382, right? So we could do a trade plan right now this morning, okay? Right now this morning. So if we put out a trade setup, a trade idea that says, hey, Aussie dollar 4-hour chart 80-20, or if we put it out and we say, hey, new AB boundary on a 4-hour chart on the Euro USD, you look at your trade plan. That's why we don't mark up exactly where to get in, because that doesn't teach you how to trade. That just gives you a signal. You don't need a trade plan for that. If I'm giving you signals all day, then you're following my trade plan. Right. That I'll spend years on, that psychologically I can handle. That doesn't mean that you can handle it. That's not learning how to trade. That's just taking signals.
Right.
Right. That's like my mother making up my bed every day, and I never learned how to make up my own bed. It's gonna be a problem when I'm an adult. Right. So that's why we do it the way we do it. We want you to take ownership of it. This is true freedom. Why be dependent on signals? If the signals stop, you stop. You don't want that to happen. So now you may say, okay, here's the trade plan. Counter trend trade. I get a trade setup that comes out. Aussie dollar 4-hour chart 80-20 or AB boundary. Okay, well, if I got a new AB boundary, then that means like this. If I get a new AB boundary and they send that in the telegram, I know I got a new AB boundary. It can either U-turn off the B boundary, or it can come to this 80-20 zone in reverse. How do I want to play it? What does my trade plan say? Well, I got a new AB boundary, but what I have to do is my trade plan says if I'm going to counter trend trade this, it has to fall. It has to create a shallow retracement and fall to the 118, 127 zone before I can trade the counter move. Follow me on that, everybody?
Yes.
Okay. All right. Or I have to wait. So if this, okay, if we put it down AB boundary in the group and we know the overall bias is bearish, you could say, well, I don't take counter trend trades off the B boundary, but if it reverses off the B boundary, yes, I'm passing on that. But if it comes into my sweet spot for my trend trading plan, then what am I going to do? I'm going to put my stop above my A, and if it gets in the sweet spot, then whatever my rules are, whether I'm limiting in, whether I'm waiting for additional confirmation, right? I'll look to short it. Yeah.
Once you're in that trade, how are you moving your stop down? You know, once the trade starts going your way, how are you, you know, moving your stop loss down? Are you trailing your stop loss, or are you waiting for swing highs?
Yeah, you could wait. You could wait for the swing highs to form. So you can wait. You could do it on that time frame, or you can drop down to a lower time frame, say a 4 hour to a 1, or you know, or 15. However you want to do it. Okay. Sometimes that's based off of feel, right? So, and what you like in the time frames that you like. So you can wait for it to pull back and then complete a run. Right. So if I take this 4 hour and move it down to the 1, maybe I get a 1 hour ABCD wave that completes, then I'll move it down. See what I'm saying?
Yeah.
Then I can move it down. And then if this is my 1 hour wave, then look, I've got this here that happened, a 1. And now that completed. And now, okay, this is coming in here. And we get that pullback. Right, and it starts to turn over, then I could just move it like that.
Got it.
Right, and then you have to watch that, right? That's where your average true range can come into play too, because if you got a big mover like a pound dollar, you know, or any of your pound pairs, right? You may not be so quick to move that stop down super tight because of the way it moves. It can move 100 pips just on a correction. You know, so you don't want to, that's where you have to pay attention to the pairs. Whereas the Euro GBP, you know, may move half that rate. So, you know, you could be a little bit more aggressive in moving your stop down because the possibilities of it making a major correction like a pound dollar, right, probably won't happen. Okay, but if it does, you're stopped out in profit. So you have to you want to look at your pairs too, like, man, how much, what's the range on this? Oh, it averages 100 something pips a day. I gotta be a little careful in regards to how fast I move that stop down.
Okay.
Yeah. So that's some things to think about as well. But that's it. And what that does is this helps you to trade through all the madness, right? So this move here, okay, I'm not a weekly chart trader, but you can see exactly how this is playing out, right? So if this, okay, right, if I played this here at a 61.8 and a 786, yes, it put me in drawdown. You can't when you swing trade, you're not worrying about drawdown. This is not a 5 minute, 1 minute chart trading, and I'm putting 3-4% on the trade. That's not what we're doing here. It's not it. That's a different methodology. Okay. So if I go in a drawdown, that shouldn't tie my whole account up. If it's tying my whole account up, then I'm too high. Right? My management is off. Okay. So if you're swinging this, look at that swing. So yes, we went into drawdown, but as long as it doesn't take out the A, it has no choice but to go my way. Right. So this one at the 61.8 is now, well, today would be 500 pips in profit. And this trade at the 786 is over 1,000 pips in profit.
Wow. Yeah.
So I'm not worried of this. This helps you to get through all the mess.
Mm-hmm.
In all the mess, right? It's a different trading style as opposed to being down on your lower time frames trying to get in and out of all of these moves. You don't have to do that. So we can clearly see that this has been making lower lows and lower highs. And what do we have it? We have a correction. Right? That doesn't mean that the ultimate path of this is now completely changing and it's going to move up forever. What that means is that this is correcting, right?
Right.
And now it could be looking to move back down eventually.
Mm-hmm.
Okay. So we don't control it. So we put in our mind where our target is, but then that's where our trade management comes in, right? Where we're moving our stop down, because we don't know what's going to happen tomorrow. We don't know if bombs are going to start dropping in some country. You don't know that. You can't predict that. You can't decide you can't predict what OPEC is going to do next when it comes to oil. We can't. We don't know exactly what Powell is going to say in November after they hike rates at 75 basis points. We don't know if he's saying, hey, if his rhetoric changes and they do get dovish in December. Nobody knows that for sure. Right. Control what you can control, and how you do anything is how you do everything.
Got it. That helps me a whole lot. Thank you so much.
You're welcome. Any other questions? Okay. And that's all you can control is your part. All the other stuff just becomes a headache. But I know if I wait on these zones, right? Even if I lose 2, 3 in a row, I already know based on the style that I trade and the levels that I look for, I don't have to be right on the majority of them to make money. It's just icing on the cake if you are. But that's why we do it. That's how we do it. So you don't have to, you can clearly see that you don't have to be constant. Once you do your work, okay, Friday night, Saturday night, Sunday, whatever. Once the work is done, it's done. Okay. Like here, how long have we had this drawn up? For a while. We've seen this just about every session, right? When we look at the Aussie CAD for a while. I can't control this. But what I can control is that my charts are marked up and this AB boundary is set and determine where I like to take trades. So here, yes, this is moving to the 382, okay? Off the B boundary, this is up over 100 pips. But if it's not in your trade plan to take that, let it go. And now I'm looking at, well, where's my sweet spot? I like it up around this range. Okay, well, I've got daily resistance there around that zone, right around when I'm getting to that 61.8. Has my bias changed on the Aussie overall? No. Well, then I'll look to short when it gets up into this zone. I'm going to pass on this. But if this trade had fallen, right, like this Aussie dollar, okay, go to the one on this where it moved big time, right? In this zone, then I'll trade that. Right? I'll take that. So you're going to find yourself, as you become more disciplined, trading far less, and you're going to make more money. Right? That's it. Now, if you like trading on the lower time frames, that's a different ball game. Right? That's a different ball game. That's something that you have to be you're passionate about that with day trading. I like it. I like the rush of being in the market, being in front of my screen. That's what I do. And there are people who are super successful doing that. But if it doesn't fit your lifestyle, right? If it doesn't fit your psychology, then you got to do something else. But once you figure it out, you can do really well in this market. Okay. Absolutely, Carolyn. Put the work in. Less is more. It is. It is. Okay. But just know, right? If there's any lesson, right, to be like, just know that hey, if I lose a trade, I don't have to be in a rush to get that back. I used to do that all the time. Every once in a while, it'll creep in, right? So it's something that's ongoing. But you can't just be in a rush. It's like, all right, I took the hit on that, but I just can't because another setup looks good. Even though it looks good, it doesn't fit within my rules. You can't just jump into that trade because emotionally you're trying to get your money back. That's how you get all types of messed up. I've been through it enough to know. You have to stay disciplined. And if you click through these charts, so one of the things I'll do at night, and then once during the day, sometimes twice if I have time, I'll get on the charts. All my charts are already set up. And I'll just go through it and click and see what the price action is doing. And then it just becomes a matter of, is it in my sweet spot or not? Right? Is it in my zone that I want to trade? Answer is no. I keep it moving. I keep it moving. That's it. So when this trade was dancing around right down at these lower levels, is it in my spot? Nope. Well, I got to pass on a Euro USD. So people always ask us, oh, you guys, you trade every single pair. We look at every single pair, but we only trade them if it's in the sweet spot. So it might only be, we might come out of a weekly ritual and there might only be one or two setups that we're looking to get involved in to start the week out. The rest of them are pending. Right? So I know my mentor, he just uses limit orders. That's it. So what he'll do is when this new AB boundary was formed, his directional bias is short on the Euro USD. So he's just going to come in and put a pending order in. It might take 3 weeks, 4 weeks for it to get there, but that's what he's looking for, right? And then you have to be that disciplined to just leave it alone. Well, my trade plan is a 4 hour. I want to get short on the Euro USD at the 61.8 on the 4 hour or the 786. I'm gonna put my limits in, and then I'm not worrying about that pair until it gets there. If it doesn't, and it U-turns prior to that, I don't look to get into the trade. I just let it run. Okay, just let it run. Over time, it'll pay off. Thanks, Poppy. I appreciate you being here. All right. So that's it. Lots of good questions. So we enter before the swing point, anticipate a swing, and then just put a stop a few pips below the predicted. For example, just in case price does not swing up but runs past, continues to go low, or do we enter after the first candlestick after the swing? That depends on your trade plan, right? That depends on the trade plan if you want to do that. I'm either typically using limit orders, and I'm usually putting my limit orders right ahead of the zone, right? The level, 61.8. I don't use them because price can U-turn prior to that. You might get a reaction prior. And there's been trades where I've missed it by 3, 4 pips, 5 pips. My limit order got missed, and then the trade dropped 200 pips. So just over time, I've always put my limits prior to the levels I want to get in. And then if my extension, right, is my TP level, then I'm going to put it, right, 10 pips or so above that TP level. Okay. But in regards to how you want to enter that trade, you can wait for a swing. You want to wait. If you're looking for additional confirmation, wait for a swing high to form in the zone, wait for the trend line to break. Swing high in the zone, trend line to break, you want to see, okay, right, bearish candle, boom. Swing high, bearish candle close, then you get in, okay? If you're looking for additional confirmation. And then you have to decide when it comes out of that zone, how wide you want to keep that stop. If you like it tighter, Then you wait for the swing high to form in your zone, trend line break, close, and then you put it right above that high. Okay. And then if it decides to push higher on you, then you just get stopped out. Okay. I know several people who trade like that because they want to use larger risk, right? They want to use larger risk. Some people do it and they don't. It's not about increasing risk. Sometimes it might just be still 0.25%. They just want a tighter stop because they don't psychologically, they don't like the drawdown. So that's something that you have to discover. So they don't like the drawdown, whether it's 0.25%, 0.5%, 2%. They don't like it at all. They rather just be stopped out and look for another opportunity. I'm super busy. I don't, work, kids, family. I like to let my stuff float. Right? I'll just let it float because I may not be in front of my computer that much, right? For those moves, especially if you're doing something like this on a 1 hour time frame or something like that. It can move fast. It can stop you out, form the high, and then get back short, and you miss the opportunity before you can get back to it. So it all depends. But additional confirmation, swing high to form in the zone, trend line break, preferably bearish in this example. And then you look to get in and you put your stop above the high. Okay. So hope I someone was able to answer that for you. Marcos, 80, 20, right? Want to definitely make sure that you get in and watch the training because we explain that pretty thoroughly in the training. But I will show you quickly. And the reason why I say watch the training is because I'm going to fly through this. And I want to make sure that you get all the details on it, okay? So if we got a new AB boundary, price action, okay? Here's my A. Here's my B. Okay? Here's my B boundary. There's a pattern that occurs in the market. So when we get a new AB boundary to form, we look for price to correct to one of your fib levels, okay? But there's an occurrence in the pattern in the market where price starts to correct or retrace, but it only corrects, say it 23% or less, right, than a 382, okay? So here's our 382 level here. Market doesn't get there off the initial correction. It pauses, okay? Pauses, and the momentum carries it past our B boundary and right up into this 118, 127 zone. Okay. So AB boundary, small correction, 23%, right? Or like we like to say, less than a 382. So anything less than a 382. Okay. B boundary break. Oftentimes you see a pause in this zone here. Okay. You'll get a pause in this zone here, like this. And then you'll see price push back down because the market loves to, for some reason, fulfill at least 38% or deeper. Okay. That's an 80-20. That's an 80-20 right here. Because we like to say 80% of the time, price likes to correct for a deeper correction, for a deeper retracement, at least 38%, at least to a 38-2. Okay. So if you ever see a B boundary that forms and you get a very, very shallow correction and price pushes up, oftentimes it'll stall around this 118, 127 zone and then get short back into the zone in this example for at least a 38-2 correction or deeper, right? And then 20% of the time, you'll get it where price, okay, makes that small correction, but then the momentum is so strong. In this example, the bulls are so strong that it carries it to the 1.618D extension. Okay. So you'll see that. You'll see that. So if you look at something like this Aussie Swiss pair, you see how it's in the zone right here on the 5 minute? Okay. You see how you got an AB boundary and we didn't get really any correction? And you see how it stalled? Okay. See how it's stalling at this zone? Okay. Herman, great job. Thanks, Cassandra. Appreciate it. So right here in this zone, that's our 80-20. AB boundary, very shallow correction. Look how it's stalling and it's pushing. See how it's starting to try to turn over? Because the market loves to fulfill, right, a 382 or deeper. Okay? And then, like we say, there are occurrences where percentage of the time the momentum is so strong and prices are making such a strong run that you don't get any correction. In other words, you really don't even get a wave. It's just impulsive. It just moves. But oftentimes, you will get this correction. So you have to make the decision. Do I want to counter trend trade? That is that part of my trade plan. Or am I only, if this is moving long and I'm bullish, do I want to wait on a low price into my sweet spot and get long? Okay. It becomes very simple. Hey, these are the zones that I trade. That's it. So all the other mess that's out here, I don't deal with it. I'm just gonna trade these zones. All right. Okay. Yes, Carolyn, me too. Yep. Kim, yeah, I know. Ryan told me that that it was covered last night too. So you go back and look at that video from last night. Yeah. Looking like it's just about to reach the sell-off. Yeah, so if you use it, so for example, on this one, right, using additional confirmation, really good observation, right? We're into the sell zone on this 5 minute, okay? And if you use trend lines and things like that, okay, for additional confirmation, you draw your trend lines. Okay. It's moving up, like so. Okay. Like this. And you could get super aggressive on that if you want to, or you can leave it because it's got a little ways to go. You can get, there's my high point. So that's my trend line going through my highest point, okay, without crossing through the wicks. Yeah. Okay. So stochastic in the sell zone. So you may say, here's a low right here too. Okay. So here's a low, like this. Bang. So you may say, okay, I've identified the zone, but I need additional confirmation. So I look for things like this. See that, how that's aligning? And then maybe I just want to, maybe I want to get a fib to the downside after, okay, support breaks like this. Because what does that enable me to do? Well, we got a swing high. If I get a swing low and a pullback, then that enables me to put my sub fib here, okay? Sub fib here. And then it can make the run, right? Then I can look there, okay? And so that's all on you, how you want to handle that, how you want to trade that, okay? I know some folks that are super conservative and say, not only do I want to pull back, because here, now I've got an area to identify where I want to put my stop. See, look, I got the swing high now, let it push down and put my stop right above here, like that. So then that pushed me back right into what we do traditionally, right? So now if I get a pullback, because oftentimes we get a break of support, we pull back. Okay? We get a break of support, we'll pull back. So some people I know, they'll say, well, even off that pullback, I want to add in an additional trend line like that. So right now, they're not worrying about entering aggressively. So if this closes bearish, they're not worrying about entering aggressively off of that, because their notion is, hey, eventually price is going to pull back anyway. Okay. And that's what scares some people who enter aggressive off trend line breaks. It's like, oh my goodness, price pulled back. I entered, price pulled back. Well, that's how the market flows. So some people will just say, hey, I'm going to let it push down, take out some support levels, pull back to me. I know my ultimate target is way down here. So I've got time because the market moves in waves. So if this pulls back, then I'll wait for a trend, how to form trend line break, then I'm in. And now I've got to stop. And you can either take it to the extension, or you just say, hey, I know where my long-term target is. I'm good now. I'm going to let it ride to the 382. So that's how you can play that. Okay. All right. Well, we're going to wrap this up, everybody. Great session. Lots and lots of good questions. Just continue to be patient and watch the videos. Watch the videos whenever you get a chance, and keep showing up for yourself each and every day. Just like Ryan always says. So, do you personally trade 382 to the winning? I do trade to the 382, right? That's how I was taught. Sometimes I'll take, if it's a big move, I may take it to the 382, take profit on that, right? Take half my trade off. So 50% of my trade, move my stop into profit, and see if the other half or the other quarter, or however you want to do it, see if it can get to the 61.8, that second target. That answer your question, Jeremy? Hope so. Okay. All right. So everybody, see you tonight, 9 p.m. Eastern Standard Time, with my awesome partner, Mr. Ryan Carthage, for the Asian session. Have a good day, everybody.